Hey there, curious learner. Welcome to the Deep Dive. Today we're digging into Charles Schwab's latest update, their Q2 2025 Summer Business Update. Yeah, we're going to try and cut through some of that corporate speak you often get in these reports. Our mission really is to pull out the key insights, maybe some surprising facts about how a huge player like Schwab is growing, innovating, managing its business. Okay, let's unpack this. So first off, looking at Schwab's Q2, wow, the numbers really stand out. They're reporting, what, 25% revenue growth? This is a powered record result.
Yeah, that's a big headline number, 25%.
And the total revenue figure was $5.9 billion, right? Up significantly year over year. Plus, adjusted earnings per share hit a record $1.14. That's a 56% jump from Q2 last year.
Huge.
It really is.
Yeah.
And earnings growth like that definitely gets attention.
But it's not just the top line stuff, it's where it's coming from, core net new assets.
Right, the NNA,
Yeah.
always a key metric.
Exactly. And just to clarify for everyone, that's the money clients are actively bringing in, not just market gains. Good point. It shows deliberate choice.
They hit $80.3 billion in Q2. That's up 31% year over year.
Wow.
Brings the year-to-date total to $218 billion.
Mm.
And they also added 1.1 million new brokerage accounts just in Q2.
So more clients and more assets from clients.
Yeah, pushing total accounts to 45.2 million and total client assets.
Oh.
This number is staggering. A record $10.76 trillion.
10.76 trillion. It's hard to even picture. What's particularly insightful here is how these figures, especially the NNA and the new accounts, they really signal strong client confidence and market share gains too.
Even though they called it a dynamic quarter, market's moving a lot.
Exactly. Despite that volatility, they're pulling in significant money and, new clients. It suggests people are maybe consolidating assets or just choosing Schwab for new investments even when things are uncertain. And their ability to get these record results, they put it down to their diversified revenue model and best-in-class scale and efficiency.
Which implies a kind of robustness, right? Doesn't matter so much if one area slows down.
Yeah. Precisely. It points to a durable structure that can perform even when conditions fluctuate. Unlike firms maybe relying too heavily on, say, just trading revenue.
Right. So, okay, strong numbers driven by clients. Let's talk about how they're engaging those clients. They mention this through clients' eyes strategy a lot. What does that actually mean on the ground?
Well, it's about embedding that client perspective into everything, from tech development to service.
The service metrics are pretty interesting. Over 14 million calls answered so far this year.
That's a lot of calls.
Yeah. And with an average answer time under 30 seconds, for the trading experts, it was even faster, like 15 seconds on average.
That's impressive speed, especially at that volume. Shows operational efficiency.
And then there's the Ameritrade integration. That was a massive undertaking.
Huge and pretty complex, merging those client bases and platforms.
They reported over 100% growth in net new assets just from those legacy Ameritrade clients in the last year.
100% growth from that specific group. That's significant.
Yeah, and improving client promoter scores, too. Those scores that measure loyalty, like NPS.
Right, a key indicator of satisfaction.
The sentiment they shared was clients saying they've never been happier. Now they have so much more at Schwab. That feels like a win after all the integration challenges.
It really does, turning that potential disruption into a positive outcome. And if we connect this to the bigger picture, this focus on what they call brilliant basics and the client experience, it's not just talk.
It translates directly into growth.
Exactly. It becomes a strategic advantage. Look at attracting 606,000 new-to-firm households in just the first half of the year.
Wow.
That doesn't happen by accident. And what's really telling for their future is their success with younger folks.
Ah, yes. I saw those stats.
1 in 6 new retail households under 24. Over 30% under 30, nearly 60% under 40.
That's laying ground for years, decades even.
Absolutely crucial, securing that next generation of investors in a, let's face it, very competitive market.
And it's not just younger investors, right? They mentioned advanced traders, too.
Yes, that was interesting. Now about a third of their new traders identify as advanced, up from roughly a fifth just 2 years back.
So the platform is appealing across the spectrum. Beginners, experienced traders.
Seems like it. It shows they're managing to cater to, quite diverse needs.
Okay, so serving current clients well, attracting new ones, including younger ones.
Yeah.
That leads us to the future. Innovation. They're putting money into artificial intelligence, AI. Mentioned 40 use cases.
40 in various stages, yeah. Seems focused on helping their reps and boosting internal efficiency.
So less Maybe direct client-facing AI for now, more behind the scenes.
That's the impression. Empowering their people rather than replacing them, perhaps, making things run smoother.
Then there's the whole digital asset space, crypto.
Right. A hot topic.
They're already a leader in crypto ETPs, those exchange-traded products.
The ones that give exposure without direct ownership.
Yeah. They hold $25 billion for clients in those. That's like 20% of the whole market for those products.
20% is a significant slice of that pie. Shows client interest is definitely there.
And the big news, they explicitly said they're planning to build out their offering to include spot trading on Bitcoin and Ethereum.
Spot trading. That is a big step for a firm like Schwab. Direct trading of the actual coins.
Definitely moves them deeper into that world.
And this raises an important question. What's the strategy behind these moves? The AI investment, like we said, seems geared towards enhancing service and efficiency in a, well, pretty measured way.
Making their existing model better, basically.
Sort of, making it more personalized, more scalable. Now, the Bitcoin and Ethereum spot trading, they were clear this is about client demand.
People asking for it.
Yeah. Clients saying, look, I hold these assets elsewhere. I want to move those assets to Schwab because I trust you. Consolidation, essentially.
Makes sense. Keep everything under one roof.
Right. But what about broader tokenization? Tokenizing real-world assets.
What do they say about that?
They seem more cautious there, asking, what is the problem being solved? They want to explore it, but in a thoughtful way, working with regulators.
So, not jumping in head first. Prioritizing safety, transparency.
Exactly. Maintaining what they see as the safest, most transparent, most liquid, and deepest markets. It's a balance between innovation and their core identity of trust and stability. They're not trying to be the Wild West of finance.
Okay, that makes sense. Prudent, but adaptable. Now, all this costs money and needs a solid financial base. Let's look at the balance sheet.
Crucial part of the story for any financial institution.
A big highlight seemed to be reducing their high-cost funding. Bank funding, specifically.
Yes. That's been a focus since rates started moving. High-cost debt drags on margins.
They cut it by $10.4 billion just in Q2, down to $27.7 billion now.
Which is, what, over 70% down from the peak?
Yeah, more than 70% from the peak, they said. That should help their profitability, right? Net interest margin.
Absolutely. Less expensive funding means potentially wider margins on their lending and investments. It frees up resources.
They also returned capital. $2.8 billion in Q2, redeemed preferred equity, bought back some common stock.
Shows confidence in their capital position. They feel they have excess capital beyond what's needed for safety and growth.
And looking forward, their updated forecast for the full year 2025. Revenue growth expected between 18.5% and 19.5%.
Strong growth projection.
While keeping expense growth relatively modest, 4.75% to 5.25%.
That implies significant operating leverage, revenue growing much faster than costs.
Which leads to their potential earnings outlook. Adjusted EPS around $4.55 to $4.65 for the year.
And they flagged that implies year-over-year earnings growth in the very high 40% zone.
40-something% earnings growth, that's significant.
What's fascinating here is how this balance sheet management connects back to everything else. It's built on that foundation of safety and soundness, but it's also about optimizing for durable earnings.
It's the engine allowing the growth.
Pretty much. Reducing that expensive funding, for instance, gives them more financial flexibility and their balanced approach to expense management. It's interesting.
How so?
Well, they're controlling overall cost growth, but they're still investing new branches, more financial consultants, new products like we discussed.
So it's not just cutting costs across the board, it's targeted.
Exactly. They're funding growth initiatives while also driving efficiencies, using things like AI. It's a strategic allocation.
And they seem confident about future organic growth, staying in that 5% to 7% range.
Yeah, they reiterated confidence in hitting that 5% to 7% organic growth band for the rest of the year and beyond, with a big focus, they said, on getting more from existing clients, deepening those relationships.
Makes sense. Less expensive than always chasing new clients.
Generally, yes. Though, it's still a very competitive world out there. Rising acquisition costs, shifting rates, market swings, those are always factors to watch.
Sure. No guarantees. So what does this all mean? Pulling it together, our deep dive shows Schwab firing on, well, quite a few cylinders. Strong growth in clients, assets, revenue, earnings, and it seems underpinned by this intense client focus, blended with strategic investments in tech and careful financial management.
Yeah, today's deep dive really highlights that balancing act, doesn't it? You have this large, established firm, Schwab, leveraging its traditional strengths, the service, the trust, the custody side.
The things they're known for.
Right. But they're also actively embracing the cutting edge. AI for efficiency, diving into digital assets like Bitcoin and Ethereum spot trading because clients are asking for it.
It's that blend of old and new.
Exactly. And for you, the learner, maybe the final thought is this. It really raises a powerful question. As client trust keeps evolving, as technology reshapes everything, how will that interaction continue to redefine financial services? What will managing your money look like in the years ahead, given these shifts?